Top three things in my notebook. Number one, volatility. It could really be number 1, 2, and 3. Number one, volatility. Number two, Europe. And number three, China. The first thing that I'd say on volatility is that not only is it back, but now it's obviously back. So you get a huge move in volatility that's been associated with what I would say multiple factors, not the least of which are global growth slowing, fully loaded with Europe, China, and the U.S. slowing at this point, all at the same time. But obviously a political gong show in Europe with Greece really leading that charge. So back and forth, the more you get of that, the more volatility you get. So what you'd have to really do, instead of just kind of navel gazing at how many points the futures are up and down, is a breakdown in either the trade or the trend line of volatility. Now, the intermediate term trend, which has been bullish for volatility, has been well supported now for almost a year. That's a year, not a minute, not a Greek headline. Again, 11.34 is the intermediate term trend line of support for volatility, how we model it. And then you have the immediate term breakout line, which is currently at 14.21. So again, the VIX closed at 18 and change yesterday. Again, we're going to go back and forth. As I've said multiple times, we're one bad jobs report away from seeing significant volatility in the U.S. equity market. Don't forget that we've seen significant volatility in U.S. equity markets whenever the growth data has been decisively negative. Now, again, decisively negative has happened multiple times, don't forget, and that's really what the late cycle bulls have to see. They have to see something that can't be obfuscated in terms of it being okay or being good. And by the way, at the end of a cycle, being good is what you should expect from economic data. That is the point. It's when it's about to go from good to bad that you really see the drop-off. So again, what you tend to see is a breakout in volatility associated with people being too long or too complacent on U.S. equities. And again, on U.S. equities, what I would point out is that, halfway through the year, this is the worst start to the year in 5 years. And again, you still see headlines from Bloomberg saying that Wall Street economists are looking for a fantastic recovery in the second half of 2015. Well, it better be, because the reality is that it probably won't be. And again, these people have been wrong routinely on both growth and kind of S&P type forecasts throughout the year, and we would expect them to continue to be. So that's a lot to say on volatility, but there's a lot to think about when you think about volatility. Obviously, it's a multi-factor model that you have to absorb. The second point that I'd say is on Europe. Europe this morning. Again, what is actually going on here? I'd say that the speed or the expediency of the political panic reflects the lack of an actual solution. Now, you can call a referendum. This guy actually called a referendum in Greece illegally, or at least unconstitutionally. Then he said that he is going to front-run his own referendum with basically turntailing on this. And then what are they going to do? Still have the referendum because now he's already decided that they don't need a referendum that they should have had to begin with? This is a certified political gong show at this point. Now, if you can't see that, you're going to see that in Portugal. You're most likely going to see it in Spain heading into the November elections. This is going to keep going and going and going, because the one thing that nobody's talking about in mainstream media is the one thing that matters, the tail wagging the dog on all this thing, which is the one thing on this thing is called growth. And if they don't have real economic growth, they have to keep panicking faster and faster and faster, and that's what you're seeing right now. So again, I know it's sometimes hard to take a step outside of yourself and say, what is actually happening here? Because in our business, everyone is so short-term focused and under so much pressure, given there are so many funds that are trying to put up numbers day to day, week to week, and month to month. But the reality is that unless Europe is different this time, it will slow from a growth perspective, and the speed of the political panic will continue to pick up. And the last point that I'd make on Europe, by the way, before I get to China, is that all major European equity markets are still below what we call intermediate term trend resistance. So again, in spite of or despite the bounce, that is the reality. So let's wait and watch. Be patient here. Don't chase your own tail. Don't chase the charts, and see what happens next. The last thing I'd say on China, now again, this is maybe just a kind of like a metaphor within the metaphor of the panic. Now, these guys have basically resorted to now talking about the economic headlines after they see the market response to the headlines. So last night, China puts out two PMI numbers, the HSBC number and what they would call the official PMI number. Both weren't good enough, and the market reaction was, or at least the headlines were saying, Chinese stocks down on the PMI number. So what you immediately saw after that was the central planners in China come out and say, no. The recovery is actually getting better. So now they're trying to classify the data after the data is released. This is like watching Joey on Bloomberg respond to economic data. It is a joke. And what's actually happening is that the market is losing confidence there. So you saw a 5.2% drop on the day in the Shanghai comp. That's point number one. Point number two, it took out the one-day bounce that it had yesterday. Point number three, it's down over 16% month over month. 1, 2, 3, there's a lot of points. I can go to point number four. It's broken from an intermediate-term trend perspective. The Shanghai comp is intermediate-term trend resistance now, which was support, is 42.92. So again, there's a lot going on there. And again, I think it really looks a lot like the political narrative that I laid out in Europe as well. And I think that that's going to be the political narrative that we're ultimately going to see here in the U.S. Again, one bad jobs report away from all of these people who are out there in la-la land on late cycle from literally going into panic. What are they going to do when they get a bad jobs report or two or three? We'll have to see. So we'll see if that happens tomorrow. And those are your top three things.